Okay, final update. We'll be exiting Finnifty. There's 1 rupee left in my position, and I'm just not in the mood to do anything further for the day. And it was a relatively tricky Finnifty expiry, and I think my plan for it went really well, so I'm quite happy with that. And yeah, just closed everything at this point. I will go over the plan, and I'll tell you about what the idea behind today's trade was. So first of all, we were opening with a gap up on the Nifty slightly above 17,000. If you go through my yesterday's tweet, I've described why that is possibly the worst time to be taking fresh short volatility positions, be it on the Nifty or Bank Nifty, because being so close to 17,000 on the Nifty, it's very easy to get screwed in such a position, even on the upside or the downside. So slight gap up, absolutely no trade on the Nifty. Decided to trade Finnifty, and Finnifty is something you have to keep in mind here. Yesterday, before the last 30 minutes, right, in this phase, Finnifty straddle was trading at something like 195, right, 195 to 200. This was the 17,600 straddle. In the end, we saw an expansion on both the call and the put, and it closed at 220. So the closing price was 220. And now my idea was that today I'm anyway not going to trade Nifty. I'm not going to trade Bank Nifty. I'm only going to trade Finnifty. And if we opened at 170 or even like 165 to 170, then I was willing to take a pretty high risk trade on Finnifty because the premiums would be justified. And it's worth trying to go for like a 15 or a 20 point trade on Finnifty, but instead we opened at 145. Now if we open at 145, it changes the game altogether because there isn't that much risk premium, and being close will be a pain because on Finnifty as it is, if you're constantly moving with the market, you're going to get screwed. I need a trade and the impact cost of each switch is going to be very high. What do I mean by impact cost? Each time if I have to move away by 100 point, move closer by 100 point, in just the entry and exit, I'm going to be paying slippages. I'm going to be paying for the constant gamma spikes that are there on Finnifty. So it's just not worth it, right? So 145, don't want to take risks. So what did I do? I went and, you know, in most situations, one would have thought, okay, 18,000 call is fine. But I wanted to be so risk averse and such a peaceful trade I wanted that I shorted 18,100 call option. And on the downside, I shorted 17,200 put option. Now this I got for about 6.2, and in the first maybe 5-10 minutes it fell to 4, which means that I was already in a profit of 2 points. And now very simple, my exit is this, right? This 2 points becomes my exit. If I go back to cost, I'm going to take the exit. So I had this up move, absolutely nothing happened in that, and we had this down move, and until we broke yesterday's low, right? So until we broke this point, it was perfectly safe, and also my puts were so far away that it wasn't much of a problem. But once we started to break yesterday's low, I moved my puts down to 17,900 and then to 17,800 and then to 17,700, and I realized somewhere around here that the 17,700 call short is way too risky, and I very quickly cancelled it with just 50 paisa stop loss, simply because calls were so oversold and they had lost so much premium, whereas puts had retained a lot of premium. Now, what do I mean by this? I shorted this put option for about 3.6. At the low, this had gone to about 6 rupees. The 17,700 call, it made a high earlier in the day of 75 rupees and was at that point trading at 5 rupees. It has lost so much freaking value. So just any kind of bounce will expand this. So I de-risked this call at possibly the perfect time. I posted on Twitter about how shorting calls on Finnifty at this point is going to be dangerous. We had this bounce, and in that I didn't have to do anything because I had already de-risked my calls. Now, as for what happened after that, I had no intention of taking any further risk. I was just trailing in whatever I could at that point. And finally, I was trading about 17,500 shares. I'm closing slightly under 10 points, and I'm very happy with that. Why did I finally exit my trade over here? Look, we broke this, and I'm sitting on 1 rupee credit. I don't want to do anything. The one option here is, because there is a bit of an IV spike when we broke here, I can move up both my puts and move down my calls, and then try to benefit from the cool off if this starts to cool off here. But on Finnifty, I just don't like the idea of trading close. I don't like the idea of actively managing any position on Finnifty, simply because if it's doing it with like 1,000 shares, it's going to be fairly straightforward and easy to do. But at the size that I'm trying to do, in getting in and getting out itself, I'm going to end up having a lot of pain. So this trade is not worth it for me, more or less. And there's 1 rupee left, but there's an entire hour, and I don't see the point of sitting through an entire hour for that. And if that 1 rupee goes to 2 rupees, I'll feel like an idiot anyway, so I don't want to do that. So anyway, that's about it. And yeah, hopefully we close with pretty high hopefully we close with some pretty high IVs for Nifty and Bank Nifty, so that tomorrow we can have, tomorrow once again, I mean, there's a RBI event on Friday. Apparently there's an RBI event tomorrow also, so I will assess Nifty and Bank Nifty tomorrow, and I'll probably be trading the both of them. And if we close at the day's low and open with a gap down, then that will give amazing opportunity. So this was the entry and the exit. Anyway, order book will be there in Telegram. So I hope you had a good trading day. I will catch you at the next one. Take care. Have a good one.